Hi, this is Stan Reinford, and welcome to this week's market update. So, again, thank you to all those people that are listening, watching, forwarding, and those that are asking questions and making suggestions. So, let's jump into it. As usual, we have a lot of new people that are joining and some questions. So, let me get into how the chart works. Again, the three boxes at the top here to the left is the 30-year treasury, to the center is the 10-year treasury, and to the right is the S&P 500, and then below we have the candlesticks. So a green candlestick means that interest rates actually got a little bit better or went sideways. Red candlestick means interest rates got a little worse or went sideways. So you'll see all the way over here to the right, we are just crossing this uh, trend line here and being just kind of restricted there just below the 100.5. If we could break through that and go higher, rates will get lower. So again, keep that in mind. The higher we are in this chart, rates are lower. The lower we are in this chart, rates are higher. So if we can get that 10-year down just a little bit more, because we're just riding right in that area, then things could open up a little bit in the market from an interest rate standpoint. So let's jump into it. As usual, I want to start with market moving news. If we look down here to the right, and we see just over just a little bit there, we have that really big candlestick there. What happened last week is that just before that, that red one that's in there, we had the BLS numbers that came out on Wednesday of last week. And if you remember, the media went nuts because they saw that there were 130,000 jobs that were created, which, by the way, is not that great overall. But again, the market saw that it was. Everybody was touting about it, from Wall Street to the president to a lot of different people out there in the finance world and everything else. But then on Thursday, they came out and they said, well, wait a minute, let's dissect these numbers a little bit. What they found is that the majority of those numbers came from education and healthcare, which are not economic moving amounts there. But what happened is in all other facets, they lost jobs and lost a lot of jobs. So, and then Friday, the CPI numbers came out and showed, or I'm sorry, the PCE numbers came out and showed that the inflation had gone down a little bit, which were all good things. So, and now we're kind of riding along with this trend. Again, as I mentioned in the BLS, 130,000 jobs being created was the headline. In reality, they lost jobs. If it wouldn't have been for those jobs there would have been big losses out there. Remember what I said before. In the previous two reports in November and December, they were all revised lower. And ADP and Revelio have been saying all along that the numbers are not real that the BLS is putting out there. So again, remember the last thing that I told you last week is that 11 out of 12 months in 2025, those numbers were all revised downward from where they were previously. So the bottom line is that the employment market is not really showing what we're being told about it. And remember, the BLS does phone surveys. So they're not really true accurate amounts, and they're trying to figure out a way to make them more accurate. So retail sales. Retail sales were not as great in December as everyone was expecting them to be. The headline is always that they're going to be good. They turned out to be less than what they thought. That was another reason that the inflation numbers are down a little bit also. Right now, from a housing standpoint, first-time homebuyers are gaining traction in a lot of these areas that have slowed down, where interest rates are coming down and there's better opportunities out there through first-time homebuyer programs to seller's assist, all these different things that are happening out there. So let's talk interest rates. So interest rates are staying steady, going sideways. We're still in that low 6% area, depending on how much a person's putting down, their credit scores, their debt ratios. Remember, there's 15 plus things that go into pricing an interest rate for each individual. So you just can't take what the media is saying out there. Everybody's going to be a little bit different. But that being said, someone that's putting a lot of money down and or even possibly a government loan can get under 6% right now. So will those rates come down a little bit more? We're hoping. So hang in there with me. Again, if you have a scenario that you would love to discuss, give me a call. I would love to help you with that. Remember, we help anybody that is buying or refinancing, whether it's a primary home, second home, or investment property, whether it is a multi-unit owner occupied, renovation loan, refinancing, cash out, debt consolidation, any number of things we can help you with. So have a great one. And again, please remember to forward and share.